Hi, everyone. Thank you so much for joining us, and welcome to another episode of Blockchain Banter. I'm Jen, and I'm joined by special guests from OpenOcean and Carbon. And today we'll be discussing the power of DEX aggregators. Now, Guy, is that you behind the OpenOcean account?
It is indeed. Very nice to be here.
Nice to have you. Thank you so much for being here. Why don't you go ahead and start us off? Tell us a little bit about yourself and about how you got involved in the space.
Yeah, absolutely. So I'm probably one of a few people whose background has absolutely nothing to do with crypto. I initially started working in broadcasting and then started working for ontology for local events for the London area. And then sort of roll on 2020, 2021. I started getting involved purely as a hobby, but then sort of more as part-time work, and then eventually rolled around to full-time work. I've worked with various different projects in all stages of growth. I helped launch one of the largest NFT projects on Terra back in the day, and now I'm absolutely thrilled to be working with OpenOcean to push the future of DEX trading and to push the boundaries of DeFi and what's possible. Yeah.
Thank you so much. It's great to have you. I'll go ahead and pass it off to Mark. Mark, if you would tell us a little bit about yourself as well and how you got into the space.
Yeah, sure. So my, similar to Guy, my background is slightly different to some others in the space. So I used to be an organic synthetic chemist. I completed my PhD at the University of Melbourne. My first postdoc at UCI, where I was there for about 4 years. I came back to Australia and started working my second postdoc position with the Australian government in 2019, and was forced to stay home all the time when the pandemic began, and a bunch of my work got wiped out. And so I started thinking of other ways I can be useful, and I picked up a contract working for Bancor in 2021. I was leading our research efforts shortly after that, and with the development of Carbon, as of October last year, I'm now leading the project.
Awesome. Thank you so much. It kind of always starts as a hobby, right? And then all of a sudden you kind of get sucked in to the space, and it's like, then it just becomes this like passion that kind of consumes you now, at least for me anyway. Guy, it kind of sounds like it was the same, and Mark, for you also. Um, so I want to speak to each of the projects. Guy, I want to hear a little bit about OpenOcean. I want you to tell us about it for anybody that is unfamiliar. But before you do, I want to start by first asking you the question, what are DEX aggregators for anyone who isn't aware on our call?
Yeah, absolutely. So, DEX aggregators are a much needed tool that maybe not necessarily everybody knows about, right? So nowadays, just to use an up-to-date example, you go and buy car insurance, right? You don't just buy the first one that you see. You look around, you scout it out, and you find the best policy. Normally, it's the one with the lowest price. So that's essentially what we're doing, but we're doing that for trading, and we're doing it in crypto. We are one of the widest reaching DEX aggregators, which means that what we do is we aggregate liquidity across DEXs and exchanges and liquidity pools on 27 plus different chains. And as of speaking, I think the count's always going up, but we're at something like 290, 295 unique liquidity sources. So yeah, primarily what a DEX aggregator does is it searches for the cheapest possible trade and the most efficient route. Well, that's the premise, and that's what we sort of strive and aim to do. So if you're chucking in a large trade, you're chucking in a small trade. When you route it through an aggregator, you know that you're always going to get the most efficient on-chain trade possible. And obviously, we use a variety of in-house techniques to do that. But that just means that what we can do is push the boundaries of capital efficiency on chain, and we maximize the trading potential for users. So you don't need to go to a centralized exchange to get fantastic rates and that user experience. All of that can be done off a centralized exchange. It can all be done on chain, and you can get just as good a value, if not more, from trading on with DEX aggregators.
Thank you so much for that explanation. Um, You mentioned really quickly 27 plus different chains. I want to revisit that, but 295 different liquidity sources. How do aggregators, or maybe just OpenOcean specifically, choose which protocols they want to integrate, and are there limitations in the tokens and that source of liquidity?
Yeah, so I mean, it is a difficult process from our perspective. First of all, when before we decide to work with a new exchange or to work with a new project or a new team, there are a few things that we need to have. So first is we need to see things like proof of audits. We need to make sure that we have open communication with the team, and that we're both on a solid footing about where our relationship is and where it's going. But normally, so like I'm going to use our move onto ZK Sync recently as an example. We've aggregated. So when our ZK Sync launches, there were various other dexes and that launched with ZK Sync. And what we did is we integrated the largest liquidity sources that we can. But that's also, that's not to say that we don't also work with smaller platforms as well, because some of these larger dexes, larger platforms, they might have really good liquidity for, let's say, 4 tokens, but then the smaller platform has tokens that our users also want to trade, want to be able to access as well. So integrating them as part of that routing procedure is sort of it's a difficult process to be able to do. But I mean, our in-house algorithm will automatically calculate on the fly that most efficient trading route. So I mean, obviously, when deciding like the new chain we launch on, or where we're deciding where we go next, we usually look at like sort of where the community's headed and where the general sort of motivation seems to be. And right now that's in layer 2s, layer 2 roll-up solutions. And so obviously we've seen loads of traffic come from the likes of Optimism, Arbitrum, ZK Sync. We were one of the first to aggregate the biggest liquidity sources on Polygon ZK EVM. So I pretty much, we just follow where that sort of narrative is heading. I mean, as a DEX aggregator, we have to be chain agnostic in our approach. So really, we sort of go where the market's going. But that's also not to say that we don't also support those smaller L1 networks who necessarily, users might not necessarily know where the best place to trade on that network is. They find one DEX, they go and use that DEX, and they try and route through a large trade and get hit with, huge slippage. So we're also there to facilitate trading on those smaller networks as well, by just aggregating those liquidity sources and making sure that people have the liquidity they need to trade through, basically.
Thank you. And Mark, I might address Guy with a question. Guy, I might address Mark, but either of you, just chime in whenever you would like to. So recently, OpenOcean integrated with Carbon, and you mentioned that maybe not all users in DeFi know of aggregators. I know the Carbon community definitely did. Speaking to the value and the importance of it, Mark, maybe you wouldn't mind speaking to the sort of value this brings and this adds to Carbon specifically.
Yeah, so Carbon is unique in the sense that rather than creating a typical LP position and then sort of earning fees across that position, it's much closer to something like eBay, where you are predetermining the specific prices that you want to buy and sell things at. And then hoping that participants on the blockchain are going to trade with you at those particular prices. And so this is it's challenging because you can't just choose your prices and then sort of expect that that traders are going to make rational decisions. I think the car insurance example that we heard from Guy earlier on the call is a good one, because you see it on television all the time from different insurers saying why doesn't everyone use us? Like, we've got the same product and it's a better price, and yet people are still using our competitors or that kind of thing. And so the reason I'm referring to that is it just means that people will often buy something, the same thing, like given a choice of 2 different prices, just pay the higher price, and it's not clear why. And with liquidity providers on Carbon, it's very much that same. I guess you can end up with that same frustration that given the choice of buying your tokens from you at a certain price and buying the same tokens, literally the same item, from another liquidity source at a higher price, it makes sense that a trader would choose yours, but they often don't. And I think in this particular case, it's not like there's like a trader loyalty or something to a particular DEX brand or something. They're really just trading out of convenience, with front ends that they're used to trading with. And I think this is where DEX aggregators, are extremely important, not just for liquidity providers on Carbon, but I think also for traders who should be, I think, trading on aggregators. So here, it's literally it's a matchmaking system, because you've got people on Carbon who are trying to sell their things at a certain price, and then you've got other people on the other side of that transaction who are looking for the best possible price to buy that thing for. And so as liquidity moves around and markets adjust, very often on Carbon, the prices of things are actually the best in the industry, hands down, like the best possible pricing. And aggregators are kind of like the Google search, right? That helps you find those best prices, so that you don't have to go through literally every single front end, shopping around, which no one has necessarily time for that. I also don't recommend it, because eventually you're going to stumble across a phishing site or something else. But if you've got like one front end that's literally aggregating all of these prices together, it's just like going to to that like Google shopping page, and then just searching for an item, and then organizing it by order of ascending price. So that's really the value for aggregators, at least from our perspective, is that it's the most efficient, the most fair and flexible way to connect people that want to buy something with people that want to sell something, and that's exactly exactly what both of these it benefits everyone in that process. There's really no downside.
Yeah, I saw you reacting a lot there with the emojis. If you want to add to that at all, please do.
Well, yeah, I mean, like from an OpenOcean perspective, from a platform perspective, it's always really good when we can have those huge deep sources of liquidity that we can use to pull people off centralized exchanges. And obviously we tap into Carbon as one of our LP sources. So it's always fantastic. I think we're on ETH. Yeah, it's always fantastic, to be able to have that liquidity utilized. And like I say, and sorry, like Mark said, we're sort of utilizing every side of it: the buyer side, the seller side, and the provider side in the middle. And being able to do that so efficiently on chain, especially now, after the meltdown that we had last year with various centralized exchanges, the future is sort of moving in this way. And I think obviously if you from us, Carbon is doing a great thing, and the more that we can tap into that and utilize all these different pockets of liquidity, the more that we'll try and do that. But obviously that is all dependent, thankfully, on our very sophisticated in-house routing algorithm. So yeah, kudos.
Maybe you can speak to that just a little bit more. Mark mentioned executing these trades or finding the most fair and efficient ways to trade, or prices, these ways for these to be executed, right? So maybe you can explain how OpenOcean specifically does this.
Yeah, absolutely. So, I mean, in order to be able to have really deep capital efficiency, right, we need to be able to trade we need to be able to transact with large amounts, but also have that liquidity there to be able to transact with. Otherwise, users are subject to excess price slippage. But obviously, as more and more liquidity is brought on chain and into LP pools, and sort of products are starting building on top of each other, much like DeFi Lego. One of the pain points back in the day was routing through liquidity. So everyone is familiar with Uniswap, obviously, and there are just select trading pools to trade between. But with an aggregator, and more specifically with our routing algorithm, we can break down a trade into multiple parts on the fly to work out if it's cheaper or more efficient. So let's say I want to trade at $500,000 and I want to buy wrapped Bitcoin on chain, right? Regardless of what network I want to buy it on. So I go to an aggregator, much like ours, I plug in that trade. And what we're doing is our in-house algorithm is analyzing on the fly all the potential trade routes and the potential hops that we could do for that transaction. But if it's more efficient for us to break down the trade into, let's say, 5 parts, so we're going to route 30% through LPA, we're going to route 20% through LPB, and so on and so forth. If it's more efficient for us to do that and then compare the total cost, like the total cost for that transaction, as opposed to pushing it through with maybe incurring a couple bits worth of slippage, then if it's more efficient, then that's essentially what our algo does. And again, that's something that we offer as a front end to all of the users on the platform, but that's also something that we've been increasing our sort of competitiveness with on the back end as well. So like we're on the 3rd version of our API, and that taps into, again, that unique routing algorithm that we've got in house. So essentially it's for, if you're doing, well, it's not only for really large trades, but if you are wanting to push through really large on-chain trades, I advise anyone just to go and try it out, like load up the OpenOcean site, just type in, I don't know, $1 million, $500, $500,000, whatever you want, and you'll see in real time the route shifting beneath the trade window. So it might refresh in 15 seconds and it's found a more optimal route. So whatever it is, whatever route, whatever tokens that you end up entering and whatever you end up trading, based on that routing below, that you're getting the most efficient route possible for that swap. And then afterwards you can always go and look at it in the chain explorer if you want to, and see exactly how it was done. But yeah, it's something that's very, very exciting, and something that we're happy to like sort of push on a competitive level as well, because let's face it, this is a very competitive field. So it's something we're really proud of. And yeah, I think we pinned the tweet on our profile, which just kind of shows how it works. You can go and have a look at it, and it shows exactly how a trade is broken down into those sort of several parts and several smaller parts.
I went ahead and pinned that to our call also. So if anybody wants to go ahead and check that out, and I encourage you to do so, please do. You mentioned one of the pain points, right? I think fragmented liquidity, I'm kind of shifting a little bit here, is something that's been spoken about quite often. You mentioned, 27 different chains, and we keep seeing these different chains, and it's wonderful in the sense that they all seem to have something different to offer, but it does raise that question of fragmented liquidity. For those 27 different chains that you have integrated with, or that OpenOcean is on, do you cross-chain swap? And do
Yeah.
all
Oh, sorry, the question cut out near the end. But yes, we do have our own. So we have our own in-house cross-chain swaps. And what we've done is we've taken the best cross-chain technology. So the likes of Stargate's Layer 0, we have multi-chain tech, we have Symbiosis. In each of these cross-chain providers, there are more coming, by the way. Each of these cross-chain providers deals with their cross-chain transactions in a different way, whether it's multi-party computation or if it's Layer 0 transactions. And what we've done is we've built our cross-chain swap, which sandwiches those really good sort of bridge paths through our partners with our swaps either side. But because we're able to integrate our swaps as part of that bridging process, we can calculate on the fly what would actually be the cheapest quote to send a token through a bridge, and then the cheapest quote for that to then get traded into the source token on the other side. But not, so I mean, not only does this help save time, it saves money, it saves frustration trying to look for a platform that will let you bridge. Like you go onto one bridge and they don't support this particular chain, or you go onto another bridge and they don't support this particular chain. And again, with the tokens, you can enter a custom token on the other side and be able to trade into very small MCAP tokens if that's what you wanted to do. But yeah, with the cross-chain technology, with us sort of sandwiching our trades either side, again, you can go on OpenOcean, load up a trade. It will show you exactly the route that token is taking, so where the swaps are occurring and where the bridges are occurring with our different partners, and then the costs incurred to do that whole entire process. So we don't take anything off that. That is done at cost for users as well, and that's again. But we do offer that via an API integration, which is coming soon. But our cross-chain swaps have been very popular, and yeah, we're constantly on the lookout to increase the amount of chains and stuff that we support on it. Because let's face it, today we are chain agnostic. DeFi is going multi-chain, so yeah, I think it makes sense to support as many as we can, essentially. But yeah, it's a good tool. The community were really asking for some cross-chain tech, and we've been working on it for a while, and we released that at the tail end of next year, and it's going really well so far. So something we're sort of happy in, and continue building towards our sort of end goal for OpenOcean, that is.
What would you consider your end goal for OpenOcean?
Oh wow! I shouldn't have said end goal for OpenOcean. I knew that question was going to come straight away afterwards. I'm asking for it. Yeah, so the mic cut out a little bit on yours, Jen, but yeah. So if I'm talking about the future of OpenOcean, I don't want to talk for too long, but we also have to consider the future of DeFi. Our initial sort of outlook with OpenOcean was to become as horizontally integrated as we could, and that means that being able to provide all the necessary tools along the whole entire workflow for the user. And now we're starting this process of becoming vertically integrated as well. So we're looking at those solutions, maybe not necessarily outside of crypto, but are on the fringes of crypto that we can bring in to sort of facilitate the whole entire user's journey. So at the moment, our transition is towards a sort of all-in-one portfolio and DeFi management platform. We want to be the first place you go to when you bring fiat assets on chain. We want to be the place you go to when you cross those assets to another chain, and we also want to be the place where you interact with your portfolio on the very fundamental level, that is being able to see analytics in wallet of everything that you hold, and being able to interact with the platform in so many different ways. So I mean, yeah, long term, it's essentially to become the all-in-one DeFi management solution, just pretty much having everything under our roof. We're in the process of getting there, and it's a slow process, but it's one we're diligently working towards. And we're going to have the first version of our portfolio management platform out later this year. I'm thinking the start of Q3 or end of Q2. But yeah, I mean, if I'm talking long term, or I'm not sure. We have to see where DeFi goes, and we have to wait till it takes over the whole traditional finance system, I think.
For anyone who's listening in and thinking, or thinks that it seems odd, right? That to hear someone talk about having all of your DeFi activities under like one, under essentially one roof. Just know that like this was in a way kind of how how DeFi started in a way. It wasn't that long ago that even at Bancor, the idea that we probably don't need a front end because eventually all trades through all DEXs will eventually be dominated entirely by aggregators. That was a legitimate expectation. And it's kind of, it could be that in a few short years it will be a historical curiosity that that DEX has had their own front end, and that's the way that that a lot of people traded. Even today, it doesn't make a lot of sense that traders use DEX's front ends. Every opportunity that I get, I try to remind people that if you are using the front end of a DEX to actually execute your trade, you're probably making a huge mistake. I think that it's a good idea to interact with the front end for liquidity provision, even like, to learn about the project, governance matters, and other kinds of things like, analytics, exploring what different projects have got going on. But when it actually comes to performing your trade, there's really no excuse to not use an aggregator. And that's interesting because if that can be aggregated, it's like, what else can be aggregated? Like maybe liquidity provisioning can be aggregated. Maybe you're providing liquidity to a pool that's already too deep. And not only are you not going to be earning a great deal of fees on that position because you've added your liquidity alongside mega whales or just an overcrowded liquidity pool. Maybe it does make sense that liquidity provisioning can also be aggregated exactly the same way that trades can, where it will find the most competitive pool for you to contribute to and things like that. Like it really is a realistic expectation that everything that we do in DeFi can and should be aggregated. And I share that same ambition, even though I'm not leading an aggregator project. It's still my ambition that aggregator projects do abstract away this kind of illusion of choice and actually do provide the best possible decisions to anyone who's interacting with the blockchain. And that way, we will eventually get to what I consider to be the end goal for anyone working in DeFi, which is that the entirety of Ethereum becomes a single, in a way, it starts to behave as a single protocol, where all of the dexes are just like different cells within the blockchain that are offering swaps at particular prices and so on. And then it will actually look and feel a lot like a single coherent competitor to the centralized offering. So yeah, just know that if it's the first time that you've ever thought of the fact that an aggregator can really aggregate every possible type of activity together, that's not only realistic, it's something that you should be excited about.
Yeah, I mean, you said that really well. I mean, the possibilities with aggregation, especially in DeFi, and the way that the DeFi Lego projects building on top of each other works nowadays is especially fascinating. And yes, you'd be surprised at how many people I know still go on front end dexes to swap and don't even consider using an aggregator. I mean, I would just urge everyone, even if it's not our aggregator, obviously I would recommend you use OpenOcean and Carbon, but even if it's not ours, just use some form of like price aggregator if you're trading. But yeah, we're also looking into. I think one thing that's really interesting is as I said, as account abstraction takes hold and becomes more and more commonplace. I mean, we already are able to have like gasless on-chain network transactions at the minute through our limit orders, but these are just going to open the doors to even more possibilities. And yeah, like you said, seeing ETH as this sort of cohesive organism where everything just overlaps and we can all pull from liquidity, and it just sort of becomes something else, something different. And the fact that it's all on chain, it's all there, it just means that we can build so many more like specific complex instruments as well to interact with the blockchain and to interact with these L2 scaling solutions. So it's definitely very exciting.
You mentioned earlier that I mean, not everybody knows about aggregators, right? Do you think it's being unaware of what slippage actually is, like the consequences of not using aggregators? Do you think it's that loyalty that Mark had mentioned earlier? Like, what is the biggest obstacle that you see in attracting users to aggregators?
Yeah, and this is one thing that I've always said through every single AMA interview, whatever, is education. Simply put, it's the onus is on us, the aggregators, to inform the wider crypto market, and educate them as to the fact that we're here, we exist, and we make trading so much better for the ordinary individual. Whereas I think a lot of new people get involved with crypto, and specifically there are a few dexes who are really, really good at sort of capturing that first person's journey on chain. I'm not going to name any specific ones, but then people get siloed into thinking, oh, this exchange has done me well in the past, and sometimes you've got to ditch that loyalty and just go wherever's cheapest, and that's where the sort of rise of aggregators comes from. But I think there is, we all have like sort of miles and miles to go in terms of educating every single person in crypto as to what a DEX aggregator is. I still meet people at crypto meetups in London, local to me, who aren't able to actually effectively tell. I say, do you know what an aggregator is? And they can only say one competitor's name, and that's it. And I'm like, well, let me tell you. And then we talk for about half an hour. But yeah, I mean, I think it's definitely duty bound on us, and we do our little bit in trying to put out as much content as possible. We try and touch ecosystems and projects in places where trading efficiency isn't necessarily great, but also those sort of unique situations where we can deploy, facilitate all that trading, but also educate people at the same time. And that's why we sort of try and have a focus on pushing out educational articles on. I think we post those on CMC and Medium. But yeah, I would say the onus is definitely on a lot of existing platforms, to do that education and to inform the crypto audience, or people coming into crypto for the first time. But it's no surprise that a lot of new people who do come in get sort of diverted to decentralized exchanges, and then their first experience necessarily going on chain is a little bit daunting. Suddenly they have to fiddle around with wallet addresses, and they have to add new chains and stuff, and that just sort of takes that level of accessibility down a notch. Again, which is one of the steps that we're taking to try and be that all-in-one hub. So yeah, it's difficult, but I think the key to that does lie in educating the everyday crypto user, and something that we all must be really consistent about as well.
Well, and I think you have to be consistent also. Hopefully, I'm not cutting out still. I know you mentioned earlier I was cutting out a little
That's
bit,
all good.
but I think that you be consistent because, like you said earlier, like we're seeing more and more come in from centralized exchanges, more people kind of entering the space and becoming curious with trading, or LPing, just participating in the ecosystem on chain. And so this is kind of like you had mentioned, going to have to be somewhat of a consistent effort, an initiative. And I think that's super important. Speaking of centralized exchanges and liquidity coming on chain, do you think, we've seen a huge increase? I think you had mentioned FTX earlier in the call. Do you see this trend continuing, more coming from centralized exchanges and trading on chain?
100% yes. Obviously, with regulation, the way things are at the minute with Binance, the SEC, and stuff like that. I think we have sort of seen there to be a concerted effort of not entirely ditching centralized exchanges, but a more gradual move to where liquidity is on chain, everything is visible. Because at the end of the day, with centralized exchange, we're putting our trust, our assets entirely into a third party, and hoping that that third party has done their security, has their due diligence, and actually has the funds to be able to back up the reserves that they say they have. And obviously with the proof of reserve steps that a lot of platforms are taking, I'm not saying centralized exchanges are a bad thing. They do have their place. They do help onboard users easier, and some of them do provide that experience. But I think a lot of us in crypto, DeFi, especially ones who are pushing the boundaries of trading on chain, we try and mimic that experience that you get trading on a centralized exchange, and we bring it on chain. So like when you load up a token on OpenOcean, for example, you get the chart and you get all your indicators, and you can draw on the charts and everything, which is just like a centralized exchange. We have limit orders, which is exactly the same, essentially the same. So we're in this sort of intermediary period where a lot of platforms are mimicking what's available in trying to draw over that liquidity. But also, I think we need to be focused on what's going to be in the future. Like I said, there will always be a need for centralized exchanges on some level, whether that's a regulatory only environment where that's the only way for people in some jurisdictions to trade, or whether it's for, let's say, centralized exchanges launching, helping facilitate funding rounds for new projects, which will eventually can move on chain. So I'm not saying that they're completely, we're going to completely phase them out, but I think we've already started to see a gradual move of more and more assets on, more and more assets coming on chain. DEX trading is up pretty much across every major aggregator I know as well. I can speak for our own volume is massively up from the start of the year, from the end of last year. And that's because people are taking the opportunities to realize that they can get that same capital efficiency trading on chain. So I think, there's always going to be a need. There's always going to be some need on some level for them. But, as to what role they play in the future, I think we just got to sit back and watch the dice fall in terms of regulation for that, personally.
Mark, thank you, Guy. Mark, I want to hear your opinion as well. Do you agree? Do you see things differently?
With respect to like competition between sort of decentralized exchanges and centralized exchanges?
Yeah, do you see more traders, more, users, anybody, involved in crypto? Do you see them coming more from centralized exchanges on chain? Do you see that trend continuing? It's something that we've all kind of been witnessing over the last maybe 6 months, year or so. I Carbon is more of a trading protocol, with limit orders and things, just like Guy had mentioned OpenOcean. It seems to kind of be a trend where this is where the space is evolving. Do you agree with what Guy was saying? Do you see this trend continuing?
Yeah, I do see it continuing. I think that it's basically the traders will go wherever the liquidity is. It's I think what we're seeing right now is kind of the culmination of like two really important factors. One, probably the most important of the two, unfortunately or fortunately, I'm not sure, is the fact that some of the biggest market makers in crypto have ceased operating, either voluntarily or because they've gone out of business. And this is having a very profound impact on centralized traders' abilities to get into and out of positions. And so, imagine being in like a small warehouse or something, trying to pick up scraps off of the floor in terms of liquidity, and just looking out the window and seeing this huge, like vibrant, ecosystem. And the reality is, a lot of trades on chain are actually cheaper now than trying to perform the same trade on a centralized exchange. And this was not always the case. Right. I think that especially during times like DeFi summer, when gas prices are extremely high on Ethereum, it's like pretty difficult to sort of justify DeFi in those kinds of times, right? When you've got like super large market makers like Jump keeping the books on a centralized exchange nice and healthy, and when on Ethereum things like sandwich attacks are running rife, and the gas to transact at all is extremely high, and the chain is getting really congested, then sure, like it's, this is the kind of thing that kind of forces traders back off of the chain and into a centralized environment. But when conversely, when that centralized environment is suffering the way that it is now, and the stuff on chain is as healthy as it is now, then yeah, they come back. And so I think the question is, can we keep them here this time? And it's certainly possible. So with the cross-chain architecture that OpenOcean is bringing, I think that a lot of traders, and this is kind of the idea of like blockchain abstraction in a way, don't even necessarily need to know which blockchain they're transacting on, or which blockchain their trade is being routed through, so long as they're finding the liquidity that they were looking for, and that they're happy with the execution price. That's really all that matters. And so we didn't really have that kind of capability back in 2020, and I suspect that if we had, a lot of people would have stuck around a lot longer, and the congestion on the chain caused by the advent of the NFT scene and other things might not have had the impact that it did. So yeah, I'm more optimistic this time. I think that blockchain stuff, especially with respect to its relationship with DeFi, has a lot more staying power. And so as we attract those customers back, I think that we're much better able to hang on to them. DeFi isn't, kind of the social experiment that it was 2 years ago, and it's a lot more grown up, a lot more well organized, and so I think it's like coming back to a restaurant or something after it's had time to like correctly tile the floor and paint the walls and that kind of thing. It's just a better place to live now than it was years ago, and I do expect that we can hang on to it this time.
I really want to jump on the end there and just touch on the point that you made about on-chain trades being cheaper than centralized exchange trades. Something that we've actually seen a really sort of shift over the last sort of few months and the tail end of last year, to the point now where capital efficiency on chain is actually so good that oftentimes, when you trade your assets into your token, whether it's stablecoin to stablecoin or stablecoin to asset, what you actually receive and the platform fees that it's actually taking through whatever you're using is actually going to be a lot lower than a lot of other centralized exchanges. Unless you're a huge trader, I'd go and look at what the fees charge on a lot of these centralized exchanges, and you'll realize they're actually quite high. And with, obviously, I touched on our routing algorithm before, but something that we do and something that other protocols do in DeFi as well is make use of the Uniswap, the concentrated liquidity pools, and being able to, with OpenOcean, trade between not only those concentrated pools and normal pools at exactly the same time, sometimes even within the same trade, which is one of our routing services that we offer to different platforms and partners and stuff that we're teamed up with. So yeah, I mean, we are actually coming to the point where a user, experienced crypto users, don't need to go to those centralized custodians anymore. Value on chain is just as good, if not better, completely transparent, completely on chain. So yeah, I definitely agree with that.
It's really incredible to hear, because I think that's one of the main reasons that I have caught on to anyway. It's some find it intimidating, you know, having to create a wallet and manage your own keys and everything of that sort. But I think it's also the cost. I think that has been one of the major reasons that traders have been so hesitant to trade on chain, was because of that. So it's really incredible to hear how far we have come since that point. And it's nice that we have different, it seems like it's a combination, right? It's that liquidity, it's being able to route these trades in the most efficient ways with the deepest liquidity. But then also, like you had mentioned earlier, more protocols kind of creating their front ends, that UI, to appeal to traders, also give them something that they're more familiar with. I think that was one of the major pain points. I'm curious what you guys consider to be one of the major pain points right now in attracting more users, or just in DeFi in general.
I think that's a good question. Obviously, I'm going to lean back on that answer that I said before in terms of education, and I think there has been a good effort on behalf of, because obviously when we interact with stuff on chain, right, what we do that through is our wallets. So part of our each individual experience on chain is going to be sort of, we're looking at the chain, we're looking at the blockchain through the glasses of whatever wallet we're using, right? So I would say that someone's experience on chain is necessarily only as good as how they interact with it, obviously, unless they're interacting directly. But let's face it, a lot of people, most people, are using a wallet in order to be able to transact. And the thing with that is that can skew it so much, right? That the wallets, I'm going to say, of their perspective, and how necessarily how user friendly it is, and the extra features and facilities that are built into those wallets. I'm not going to name any specifically, but things like our trading, our routing algorithm for trading is baked into a few existing wallets, and that just actually saves the need to come to the OpenOcean platform entirely, because they just tap into us on the back end. So, like as Mark mentioned earlier, all of these projects and protocols eventually are just going to be completely overlapping. We're going to have liquidity being pulled from everywhere, and just this sort of cohesive glob that we can trade between. But yeah, I think for DeFi and for bringing people into DeFi, a lot of effort does go, is sort of concentrated amongst these wallets, because obviously that's how we interact with the blockchain, and that's how we interact with crypto nowadays. But yeah, it's obviously, that's for the future. It's something for account abstraction to maybe look at seeing at how we can use contracts instead to manage user funds. And I think all of that we're sort of slowly shifting to sort of that sort of general direction, in a sense. But yeah, I mean, there's a lot of pain points that I think initially getting people involved in DeFi, and again, making it as accessible as possible, and being able to offer those rates, those highly competitive rates that are better than the centralized exchanges, is sort of music to a lot of people's ears. But yeah, no, I would agree also as well that, you know, with setting up wallets for new chains, you know, you have to go and import all that information, type all that information in yourself. It's not user friendly. It's not easy. So, personally, I'm looking forward to seeing how our interaction with the blockchain changes, you know, over the next few years up into 2025. You know, personally, I've changed my wallet provider multiple times because I'm always trying to look for and find that best user experience, and something that I think varies quite a lot.
I think that there's a lot of reputational damage done to crypto over the last couple of years, from all sorts of directions. And I think that this is probably the biggest challenge. I don't think I've never really accepted that setting up a wallet or something is really all that difficult. I know that, like, it's kind of the party line now to sort of assume that that's one of the biggest frictions with onboarding people into blockchain But I just don't think it's really that difficult. I think people go through a much more complicated process when they learn to drive, or when they, like pay their tax, or, even when they, like, I don't know, set up their PlayStation. Like, there are so many things that are so much more complicated than setting up a wallet. I just don't think that we should pretend that it's realistic, that that's the biggest blocker for people to sort of become involved. I think that it's much more likely that they look around at the news and, things like, the essentially the threats in cryptocurrency, and what it means to interact with protocols. And I think that there's a lot of I don't want to say, it's not uncertainty. It's more like you need to have a lot of faith, even in your own ability, to identify those threats. And I think that can be really scary. Like, just recently, I got a speeding fine, and for the first time in my life, it was delivered via SMS to my phone. And my first instinct was, this is clearly a scam, right? This is not how speeding fines are delivered in Australia. But there was a phone number, and I was like, I'm going to call that phone number. And then I spoke to someone, they had an Australian accent, and I was like, okay, it's possible that this isn't a scam, that it really is, a legitimate thing. But when it came to, can I have your credit card number and driver's license number to pay the fine? I'm like, I'm not really comfortable giving you that information, because it seems unusual to me that that this is the first time I've found out about this infringement, and I'd like some verification and that kind of thing. And it took a couple of days, but eventually they were able to provide a photograph of my car, and the photograph that it took as I was over the speed limit or whatever. And then I'm like, okay, this is probably legitimate Australian government stuff. But that's the level of paranoia that cryptocurrency is kind of instilled in me now. Like, there's so many, there are so many people out there that are creating like carbon copies of each other's front ends in order to achieve malicious attacks. Like, I remember the Badger DAO front end fork, for example. I remember all of these other things, and I'm sure that it is this kind of crap that makes people second guess whether or not it's a good idea to interact with blockchains. It has nothing to do with how hard it is to create a wallet. And yeah, I think that is the biggest issue that we face with onboarding. Still, maybe forever.
Yeah, I mean, you see the headlines where I think it was last time, so when Pepe had its first run up, right? And you're trying to explain to somebody the intricacies of DeFi and how loans and how trading works. And then they go, well, Frogcoin did 200% or 1,000% in a week. Why do I need to get involved with the rest of it? And it's sort of on like a brigading level, so to speak. It sort of takes away that for me, it takes away the sort of realness, the authenticity of it, and the utility as well. When people just point to coin that's done 1,000% because it's a joke for a laugh. It's things like that we hear about it as well. That I think personally, not saying that it puts people off, but maybe doesn't help paint the picture of this is a serious industry. This is here to stay, and it's just a matter of seeing the evolved product come out the other end. But yeah, I think when you see news like that, and when, likewise, like Mark said, when you hear of huge vulnerabilities, huge exploits, like the collapse of Terra didn't necessarily do us any favors. Those kind of things are like small setbacks, but again, they're on like a personable, communicative level. That's not necessarily sort of a technology based like roadblock in order to getting into it. That's more of like a community social aspect, but something that might give the ordinary person moment to pause, moment to consider, do I actually want to put some money in, in chain? Is there going to be any guarantee for this? There's all those sort of doubtful questions. But I think just to add on to the anecdote you mentioned as well, crypto, I think, has definitely taught me to be more critical in my outlook, not necessarily not critical, let's say analytical, of platforms that we use, platforms that I personally use. And again, when we're looking at integrations, because especially nowadays, some with some offers, you can see the smoke through the trees, and it's very clearly a ruse. But to the ordinary sort of indistinguished person, that might not necessarily be the case. So I think it does, it's sort of definitely made me a little bit more due diligence, like undertaking my due diligence more on different platforms and stuff. So yeah, I think there are multiple levels, but I mean, I've also heard a million times over the story of, oh, I made my first wallet, clicked yes, it showed me 24 words, clicked through, load in a bunch of money, and then whatever happens, they lose the tablet, they move phone, they switch the app, and then suddenly they don't have those 24 words again. So technology like MPC, that's again is taking away the need for backup phrases and stuff, I think is really great. I think that's fantastic tech, and something that is going to start playing a bigger and bigger role in crypto. But yeah, it's interesting to see that the sort of evolution and what it's gonna, what DeFi is gonna become over the next few years. And I definitely say that there are other hurdles as well. With like bringing value to fiat on ramps and those on ramp providers and off ramp providers specifically, because when those get gobbled up, it obviously just becomes a little bit harder to move money on and off chain. But I mean, there's always going to be that facilitation there. It's just a matter of who does it, really.
One last question. It kind of seems like as we continue development, as we continue maturing as a space in general, hopefully we can repair that reputational damage that Mark had mentioned earlier. And speaking of developments, we are almost out of time, but I would like to hear about the latest developments for both OpenOcean and Carbon. Guy, maybe you wouldn't mind speaking to OpenOcean first.
Yeah, absolutely. So recently we've been really, really focused on the latest version of our APIs and SDKs. We're now on API SDK v3, which is something that we offer to to all our partners, anyone who wants to work with us. And we don't charge anything for integrations, something that we're really, really proud of. We've just been integrated natively into 2 other leading wallets. So again, if you're using those, and you'll see them on our Twitter page, you can go and swap between them with OpenOcean seamlessly. But I'd also say make sure that you're following us on Twitter, following us on Telegram, because that's where we release, Telegram and Discord specifically, because we release our announcements there sooner than everyone else. So like our new Ethereum staking aggregator, we released that to our community first, so you could go on and you start using it before everyone else and gobble up all the best rates. But I would say make sure you're just following us in all the socials. Keep an eye on us. If you're on CoinMarketCap, make sure you shoot a follow over there. And if you're one of these people who has never used a DEX aggregator, if you're trading on Ethereum through OpenOcean, you could be pulling from Carbon liquidity as well. So there's all this interconnectedness, and I would just urge anyone who hasn't tried an aggregator or who hasn't tried a service like this, just to give it a go for your next trade on chain. And I would say also keep an eye on the horizon for the rest of this year. We have our personal DeFi sort of management platform coming out. I think that's Q3. But again, we're just going to keep doing our thing. We're gonna I think we've got another new test net that we launched support for today that will be going to mainnet next month. Pretty much wherever everyone is trading, that's where we want to be, and that's where we want to offer our services. And if you're in any doubt, jump into Telegram, ask us a question anytime. We'll be more than happy to answer you. Cheers.
Wonderful. Thank you so much. Mark, tell us about the latest updates or development updates with Carbon.
Sure. So for those who aren't familiar, Carbon is the new DEX flagship offering by Bancor. Carbon is not an AMM. You still provide liquidity to it, but unlike an AMM, it doesn't prescribe for you a specific trading profile. Whereas on a typical AMM, you would provide liquidity, and then the exchange will basically use that liquidity whenever it decides, or really whenever a trader decides. On Carbon, it's much closer to eBay, is what I said earlier, and I still think it's a good analogy. And I say it's like eBay because you decide how much stuff you want to sell and exactly what price you would like to sell it for. So, for example, one of the things that you might have in your wallet is something like, like 1 ETH, and you know in your heart of hearts that ETH is going to go to, I don't know, $20,000 one day. What you could do is put it on Carbon and say, sell this ETH at $20,000, please. And there it will live in perpetuity until someone decides to buy it at that price. Now, it's not a, in that sense, it is a limit order machine. But it is a maker limit order machine, not a taker one. What that means is that there is no oracle, and there are no keepers. That ETH is available 100% of the time at the price that you've decided. Now, one of the things that makes Carbon interesting even to people from the centralized exchanges is that it offers what we call rotating liquidity or linked orders, which means that if you are of the mind that the market is going to be range trading between two different price points for a little while, you also recognize that there is an opportunity there to buy low and sell high with some frequency. So, for example, you might think that ETH right now is, it's just had a little pump the last couple of days, but it might be hitting sort of a local top, at least over the course of today and tomorrow, or maybe over the weekend. You might then decide that you will be interested in purchasing more ETH as the price comes down. But then as the price goes up, maybe again on Monday or Tuesday next week, you would like to sell it again and essentially scalp the market. Carbon lets you do this automatically. You can actually, put up, say, USDC as a limit order to buy ETH, and then simultaneously create an order to sell the ETH that you haven't purchased yet. And so if your first order hits and your ETH balance goes up, it goes up in the range that you have set at the other price point, which is very, very unique. And this can cycle back and forth in perpetuity between those two price points essentially forever. And every time it crosses those price boundaries, you are buying the asset at a low price and selling it at a higher price, which I think is probably the most fundamental, the most intuitive of economic primitives anywhere in DeFi. And so, yeah, we're very, very proud of what we've created. There is nothing else like it. I think we've got one of the most defensible moats at the moment with respect to unique technology and unique product offerings. And right now, there's actually a trading competition running. So if if this idea appeals to you, if this mode of providing liquidity, similar to how you might interact with an order book, is appealing to you, do go and check it out. If you've got a good a good head for trading on relatively short time horizons, I think you've got until July 11th. To show us what you're made of, because we'll be giving I think $10,000 reward to the trader that produces the highest ROI for themselves over that period. So do check us out. The app is carbondefi.xyz, and yeah, I think that's probably the best rundown I can give you.
Amazing. Thank you guys so much for being here. Thank you to all of our listeners. We do have another Blockchain Banter tomorrow morning, followed by a coffee break. We were speaking to how important education is in DeFi in general, and our coffee break happens on the Bancor Discord. This is where contributors and community members just get together. It's an open call for anybody to join. We speak to different trading strategies, different narratives, anything that's really happening in the space, try to pick each other's brains. Definitely join us there. If you have any questions, my DMs are always open. I encourage you to not hesitate at all to reach out to me. And again, thank you to all of our listeners and to our guests, Guy and Mark. Thank you guys.